I'm joined today by Sam Wahab, an equity research analyst from Liberum, who covers the renewable energy sector. Hello, Sam. It's good to see you.
Good to see you too, Alan. Thanks for having me on.
Pleasure. Thank you for joining us. So, I'd particularly like to speak about your latest note on clean power hydrogen. Of course, the EPIC code there is CPH2, London listed, with a market cap of about 35 million as we speak. But before we talk about CPH2, could you please give us a brief overview as to why the renewable sector is poised for growth and, of course, the opportunities that exist there for companies such as Clean Power Hydrogen?
Yeah, absolutely, Alan. I mean, it's a good time to be talking about this, really, because we're, hot off the heels of COP28. We've just heard some of the new mandates that have been set from a number of nations, and the new program is to increase or treble renewable exposure by 2030. So a massive uplift from what we've already seen already over the last few years. So we're going to see a bit of a hockey stick in terms of growth, whether that be regulatory support, companies coming to market. But what we can all agree on here is a huge expansion in terms of global growth in renewables. In terms of the renewables space, I mean, there is a plethora of different types of technologies, all of them disparate, all of them fairly nascent as well. I mean, obviously, there's wind and solar have been around for some time, but we're going to come on to CPH2 fairly soon. But hydrogen, for example, is a fairly new concept with regards to the greener side of things. It's been around from blue and grey, etc. But yeah, it's going to be interesting times. All we can look to is growth across the sector, whether that be through batteries as well, which I think is another interesting area that some investors need to look at. But yes, I think it's going to be rosy or sunlit times for renewables.
Excellent. Well, of course, we're all hearing about the government's requirements to hit these net zero targets. Could you elaborate perhaps on how hydrogen will play, or the role hydrogen will play in getting us to net zero?
Well, hydrogen's obviously been around, as I mentioned, in its green and blue form, and I think
Hmm.
obviously we're all now migrating towards the greener side of things. And hydrogen as a commodity, it's a versatile energy carrier. So where you have abundant sources of renewable energy, I think the view is longer term that can then be carried to those places in the world that are less abundant, almost mirroring the sort of more traditional fossil fuel led hydrocarbon or energy sources. So I think as a longer term goal, hydrogen is almost been seen as the silver bullet to sort of replicate fossil fuel led energy, but doing it through a greener way. The issue we have at the moment is cost, and viability. Clearly, creating hydrogen by splitting oxygen or splitting water into hydrogen and oxygen is expensive in its current form. It's also unproven. It's not been scaled as much as the market would have liked. And therefore, we do need to get those costs down. As analysts, we look at the levelized costs of hydrogen or levelized cost of energy when making our cost assumptions on greener or renewable fuels. And so at the moment, hydrogen in its green form is difficult to sort of compare with gas, oil, coal, solar, even possibly even onshore wind. So we're sort of still going through that process. But I'm sure we'll come on to talk about more individual names.
Indeed, indeed. So let's get some detail now on CPH2. Can you firstly tell us what the company does?
So it's an electrolysis maker. So as I mentioned, water to split into hydrogen and oxygen. Where I think some of the names in the London market that some of your viewers will be familiar with, the likes of Ceres Power and ITM Power, where they're all building electrolyzers or fuel cells essentially. And so ITM power would be a perfect example. So there's several types of electrolyzers out there. There's alkaline, which has been around for over 100 years. There's now more recently polymer exchange membrane electrolyzers. And CPH2 have stripped it all back and they've created an electrolyzer which is IP protected, which takes away the membrane. So their biggest exposure to commodities is really steel, and we've seen that come down 50% from the pandemic highs. So they've created this technology. They are doing it on a much smaller scale relative to Ceres and ITM. So they're targeting smaller entities, I mean, I would give you an example of some of their customers at the moment is Northern Ireland Water, which surprisingly to me has a fleet of hydrogen buses, and they've also got water treatment through the pure medical grade oxygen that they'll be created through the CPH2 process. In terms of the company itself, similar to ITM and Ceres, it's had its speed bumps along the way. Notably through them, they have had difficulties in scaling up the technology. But more recently, I think you mentioned in my recent note, that they seem to have overcome some of these milestones and are now on the cusp of commercialization through some of these smaller scale module electrolyzers, and then they'll build through that.
Okay, yes, and of course, on the subject of that note, you of course initiated coverage back in May last year, but you updated the note recently, highlighting that key milestones have been achieved. Which milestones are you referring to in particular, Sam?
Well, so as I mentioned, the issues with these nascent technologies is you can prove it sort of computerized, but it's actually when you get to the building phase and you then try and execute it, and it's that scaling up to commercial size that is often the issue. So the company initially targeted at IPO that they would be commercializing a 1 megawatt electrolyzer, and then subsequent to that, it would go straight into 2 megawatts. Where they are today is that scaling has become tricky for them. So they've got to 0.5 megawatts, so they're MFE 110. Um, but once they've actually commercialized, proven that that can be commercially viable, it's not a big jump really to double that size and then double it again. It's just being able to create those separated gases that is the real issue. They managed to do that, and so we should see their first items go to customers very early next year, which would be a huge achievement for a company like this. We haven't seen that really in the London market before. It will be almost trailblazing with a very different technology to the likes of an ITM Power. So bright future ahead, assuming that they can hit that again, that second milestone early next year.
And in a sense, you preempted my next question. Of course, the company is pre-revenue. And I was going to ask, why you think now is a key time, but I think in some ways you've answered that. Clearly, they're on the cusp of some pretty substantial commercialization.
Absolutely. And it is just reaching that point of commercialization, which is a game changer for all of these companies. I mean, the thing with electrolysis is that no one really knows where, which one's going to penetrate the market, which one's going to have the biggest market share. Could they have 25%? Could they have 25 basis points? It really is unknown at this point. But in my opinion, they can all coexist. There's always going to be a market. If you believe all the projections by the world's leading economists on where hydrogen will play within the global energy mix going out to net zero, it's going to have to be significant. So I think companies like CPH2, once they reach the point of commercialization, it is almost a hockey stick thereafter because, well, I get a good example is their current business plan is for 4 gigawatts of market share by 2030. That's roughly 10% of the EU market. And one of those gigawatts will be them building the electrolyzers themselves, but 3 will be through a licensing model, which no one can really put a parameter on that because as soon as you've demonstrated your technology works, it goes around the world. For example, they've got licensing deals in with Liberum, which is across the sort of New Zealand and the APAC region, and also their biggest shareholder, DCA Dutag, which is and their subsidiary Canera, has much of the Middle East sewn up. So once they've demonstrated they've got commercial orders out in those countries, then the world's their oyster, really.
Of course, of course. You've already covered some of those, but for shareholders and investors looking at this for the first time, what do you see as the key share price drivers and catalysts coming up in 2024?
So for CPH2, it will be successful factory acceptance testing, which is essentially when their first order is, or the counterparty is Northern Ireland Water. They will come in, go into their factory in Doncaster, and then sort of ratify whether it's acceptable for them to take over to Northern Ireland and start producing hydrogen and oxygen. Once that happens, I think that'll be a real big inflection point for them, because it's already demonstrably working for Northern Ireland Water, and then they'll push on with the licensing model. Obviously, they're a public company, so everything they do has to be released to the market, and there are a lot of eyes on those releases, and I'm sure building up that order book and backlog is going to be the next big stage for them.
Of course, and presumably with that, commercial shipments, once they're reported to the market, will be key share price drivers and potential inflection points too.
Absolutely, couldn't agree more.
Yep. So can we just go on to numbers now, Sam? This is obviously an area that you spend a great deal of time looking at. What does the balance sheet look like at present? Is it in good shape for future growth strategy?
I think for a company of this size, I think it is. They haven't raised any money since their IPO fundraise. The last interims was just under £13 million. They've also got investments within that, so they've got cash on hand, or at least liquidity to go to. So I think they've got sufficient cash runway to get to their first commercial orders. And as I say, once that commercial activity takes place, then who knows where it goes from here from a cash perspective. But there is no real cash constraint on the business, zero debt there as well. Very, very low burn within the business. So they are very prudent when it comes to capital discipline, which I'm sure most AIM investors look for first in this market. And then when you couple into the fact that they've got a fairly sticky shareholder base there, they had big, strong, support from, as I say, Canara or KCA Dutag at IPO that hasn't changed at all. So I think they're in good shape for a company of this size when you consider that, with the sell-off and the challenging market conditions that I think most AIM companies have experienced over the last 12 to 18 months, that they're probably running, their market cap is running at only sort of 2.5x cash is pretty crazy if you put it into a normalized market condition. So no worries about this company. If they did ever have to recapitalize in the future, I'm sure it'll be for additional growth opportunities, which most market participants will be very supportive of.
Good. Well, anyone watching this, if you would like to read Sam's note, please do contact our team at Novus, or Sam, they can contact you directly at Liberum, I guess.
Absolutely.
Okay, that's great. Well, Clean Power Hydrogen certainly looks set for a very exciting and progressive 2024. It just remains for me to wish you all a happy Christmas. And Sam Wahab, analyst at Liberum, many thanks for joining me today, and also happy Christmas to you too.
Happy Christmas, Alan. Thanks very much.